Hello, everybody. Glad to be back with Jesse from Apex Crypto Consulting. Make sure you follow him over on his channel because guess what? He has solid deep dives. This is why I love networking with people that also take the time to do the deep dives. In this outline, we have something very, very crucial and new to get into in regard to XRP, XDC, and even Quant QNT. Yes, you saw right in that thumbnail and in the title, the money engine. Do we have receipts to show that? Yes, we do. We're going to jump into all of that and why it matters to you in today's outline. Consider smashing that like if you haven't done so already. And a lot of you, according to our analytics, are just regulars. Consider being a subscriber. Hopefully, we can earn it in this particular video. Let's jump into all the material and why it matters.
If managing your crypto feels like solving a puzzle, it's time to switch to Decent Wallet. So just a few taps, you can manage, track, and secure your crypto with unmatched ease. And here's the best part. Grab your Decent Wallet at a discounted price by using the referral link below. Don't miss out on making your crypto experience smoother and more secure.
First thing we're going to pull up is this update from the Quant network. Why pull that up? Well, as we know, they have an update about Quant Flow. It's the new product, separate from, of course, the Overledger. And as I pull this up on your screen, you're going to see it specifically from this particular source. Who's the source? Well, basically it's this. They're referred to as disruptionbanking.com. What are they all about? Well, they go on to mention specifically on May 22nd, just a few days ago, that Quant makes money smarter with rollout of industry-wide programmable money. How many times have you heard about Quant being the label for programmable money? As we take you further down into this, it's not just about programmable money, it's the evolution in that programmable money, but literally, as you see on the screen, Quant Flow, the money engine. Now, I did mention XRP and XDC, and we'll show you how I feel as though those play a big factor in that as well. QuantFlow introduces the world's first open source programming language designed specifically for money. And of course, like it says here, you see the announcement of Quant being a global leader in fintech, but also how it mentions industry first programmable money through QuantFlow. QuantFlow was developed in response to the growing demand for smarter forms of commercial bank money and the need to modernize just that. As we get further into it, for corporates, it enables them to harness programmable money to effortlessly connect to existing banking, business, and financial applications. Don't forget this part, because when we show you a visual of a video, well, you'll have a broader understanding of how it all comes together. And this part, the quote from Gilbert Verdin, he says, money today may look digital on the surface, but beneath the apps, most financial systems still rely on decades-old static rails. QuantFlow changes that. It brings intelligence to money itself, turning it into a programmable instrument embedded with code, not spreadsheets. This gives banks fintech-level agility without compromising on resilience, compliance, or core stability. All right. You're more than welcome to read the rest of this, which I highly would recommend it. But whatever the case be, when you get more into it, especially when you see the statement from David Yates, former president of MasterCard, Western Union, and First Data, well, I would agree. The world is digital, yet money remains stuck in the past. Speaking of the past, let's take you into why we need to go from the past to the future. In this outline, we're going to show you this key thing. And if anything, we're going to come back into the frame. Because in this visual, you're going to see a video, and I do apologize, and the video is a little bit blurry. The person who took it, I don't know who it was, if it was Quant Pop or whoever. The visual is not 100% crystal clear, but here's the point. It's the access that that person had to these particular things from QuantFlow. These are things that you've never seen before. So again, let's get right into that and why it, of course, matters. So pull this up on your screen. You're going to see some things. And the first thing you're going to see is literally from this recorded screen capture of QuantFlow demo. Yes, the demo. Here we go. What you see here is the flow of the documentation. You see PayScript. You see the sandbox. You see all sorts of things here. And again, when you get further into it, it's how it all comes together and why it matters to you. The access to that particular sandbox, the pay script in itself. But when we get further into it, you see, for example, how this all comes together. And one area of focus is the automation, the reserve, all of it. There's going to be a key area of focus, which I'll pause it here in a second, but it's not just about the whole thing about automated transfers. It's not just about the whole thing of, for example, the reserve funds. It's understanding how this makes sense to us. So when we get down to this part about specifically built-in functions, you see this area that mentions specifically like lock functions. You see also reserve functions, script functions. But when we get further down here, it's the bottom part where it says specifically this. And it's where it says IBAN, for example, and also the part where it says scan, the account identifiers. What are we referring to in that regard? Well, again, understand that there's something here that needs to be completely mentioned. And as we share a little bit more about this, I want to point out this key area about not just the primary account numbers because of what Quant offers for digital IDs, but it's the whole thing about IBAN. As you see here, the international bank account number used as a standard in cross-border payments with participating countries and defined like with this particular ISO standard. And below that, you're going to see BIC and SWIFT. Like it says right here, specifically, the business identifier code used in SWIFT. All right, so remember that for a moment, because when we get into it, well, as I always point out, I call it boil it, mash it, stick it in a stew, because as I take you over to what is the next connector of it all, because this is why we pay attention to all this. As you see, straight from Swift in their new update, main message flow, the MMF. But you see here, the processing invoked by customers to send and receive messages and files to each other. The main message flow is performed by applications, messaging interfaces, communication interfaces, including SwiftNet, link to the sender side, central messaging infrastructure. That is what? It is front end processor, which switches the FIN bridge and the FIN, and the receiver's communication interface, including Swift Link or SwiftNet Link, the messaging interface, and the applications. Now, again, what about the one that will orchestrate all this? Let's take you to the next page, because when we do, even from the recent Swift.com updates, they mention this. They mentioned the whole thing of a cooperative piloted first phase of new capability, called, by the way, Swift Securities View, with leading financial institutions as part of a push towards zero touch processing, which leverages the power of unique transaction identifier to make the complex flow, no pun intended, of a securities trade as simple as tracking a package. Now, think about that, because when I come back into the frame for a moment, I want to mention this. And that is, we know that XDC will play a role when it comes to trade, but it's the terminology here. When I think of one touch, I think of automation. I think of, for example, how it's all coded together. Say what you want when it comes to Quant's overledger. 0 lines of code when it comes to specifically the Make integration, the Zapier integration, and from the dev side portal, 3 lines of code with Pipedream. Before we kick it over to Jesse, it's understanding why you, again, are paying attention to all this as, let's face it, an investor of some of these things. Because when you get more into it, remember how we mentioned Quant Network? And remember how we mentioned the whole thing from Swift of the unique transaction identifier? Well, this is interesting. Because even on a simple search, when you look up Quant Network and a UTI, as a unique transaction identifier, well, they recognize that while it's not explicitly confirmed in the provided context, Quant Network's focus on interoperability and enterprise solutions does in fact suggest the potential use of unique transaction identifiers as a standardized way to identify transactions across different systems. I mean, the way I look at it is it's already there. And this other part, when you get into the part where it says number 3, Quant Network's multi-layered architecture and interoperability, you see that Quant Network's overledger technology does in fact connect different blockchains, of course, enabling cross-chain transactions and data exchange, because they already have the standards that were put into place. Now, again, just a tad bit more before I kick this over to Jesse. Even if you go to dtcc.com, which has been making a lot of news lately, right? It says it is in fact true that transactions are more complex than a single package or simple package delivery, as allocations can include a single trade allocated to several different parties. While pockets of identifiers are available, they can differ across firms and platforms. What makes a unique transaction identifier different is the ability to trace and trade through both downstream and upstream systems, providing trade status to all parties at any given point in the transaction. And like it says, the modernization moment. I mean, modernizing it. Back to the whole thing again of Quant when it comes to all that. Because when we talk about trade, again, Quant XDC R3, we know, for example, that R3 and Quant are collaborating on various blockchain projects, but with Quant's Overledger platform playing a key role in enabling interoperability and programmability across different blockchain networks, well, that would include XDC Network R3, and that is, in fact, a leading enterprise software company. They use Corda and, of course, that platform for tokenization and digital asset solutions, and XDC Network, of course, for that bridging of that legacy system. Now, let's have Jesse come into the mix because, if anything, I want you guys to realize this. Jesse, before we kick it over to André Casterman on the key finding to connect it all, as well as Ripple XRP, it seems as though that when it comes to automation, Jesse, there is something to be said when it comes to the flow and the automation of how this all comes together. I think it's big for Quant. I think it's big, obviously, for XDC. But when we get further into it, you'll see how even Ripple XRP comes into the picture, especially with the SWIFT documentation and proof with the visual. Your thoughts, Jesse?
Oh man, thanks for having me, buddy. Yeah, man, it's all connected at the end of the day. I mean, a lot of a lot of people believe that R3 is not connected to XRP. They're not going to use XRP, or Swift is not using XRP, and Quant's kind of separate. And no, my friend, it's all connected. I mean, I show a video. One of my videos, I show one of the guys at Swift, and you might have seen it before. He says Swift runs through my blood. I've been with Swift for over 20 years. He starts talking about all the benefits about Ripple, and he says, we can see XRP running on Swift rails, when we need it. Well, you always need it, because I mean, when you compare Swift to XRP, man, like, we know it's a dinosaur, right? Like, what do you want? Instant settlement, and with like no fees, no nostro accounts needed, no failure, nothing? Or you want to send a payment and not know if it got there? Because with the Swift system, you've got like 7% error rate. So there's that connection there. You've got R3 partnership with Ripple, where they were given 5 billion XRPs, and then now you've got Gilbert Verdian saying that we also partner with R3 because they're the ones that are bringing in the shared ledger, where all the tokenized assets will reside. Gilbert said we provided the interoperability and the programmability and common APIs. And then you've got XDC, that's for global trade. So XDC, my understanding, is a tokenization of global trade documents. So when you do shipments, you've got to have the boat that's doing the shipment. You've got to have all the cargo insured. You've got letters of credit. You've got contracts, everything. So XDC is big for that. And then they're using R3. They're using the R3 Corda settler to settle the transactions with XRP. The R3 Corda settler specifically uses XRP for liquidity and settlement. And then so yeah, it's all connecting, man. And then you've got Quant again, like, what's the main connection layer, and bringing all the legacy systems inside to connect to everything. It's definitely all connected. And now you're seeing here how they're giving identifiers to everything, because there's other identifiers, like business identifiers, and the decentralized identity. Can't remember what it is. Is it DEI? But they're giving an identification number to everything. So businesses, individuals are eventually going to have them. That's why a lot of people say, like, we're going towards a cashless society here. Long term, like, this is not good. The government can see everything that you're doing. Like, you can't get away from, you can't do any transaction without the government seeing it. And programming money too, right? Like, it's programmable money. So government's like, oh, okay, so you didn't do this and this and this year, and you traveled a bit too much, and you didn't follow your how would I say that? Yeah, you traveled too much there. You're a bit too hard on the your what's the word I'm looking for here? But areas, the emissions, right? The whole environment emissions. So, oh, you traveled a bit too much, so you're not going to get your universal basic income this month because you didn't follow what we told you to do, right? So it's like we're seeing these identifiers pop up everywhere, man, and like it's crazy. Like it's really all connected. It's really all connected, and the amount of data, right? The amount of flow once you start automating everything like that, like the amount of flow that's going to go through this new internet, this internet of trust, which is Quant, and then the internet of value, which is XRP, and all these other networks that play a role. Like the amount of data is going to be absolutely insane. Because in 5-10 years from now, because it's moving so fast, in 5-10 years from now, you're gonna have seamless everything, man. Like this is gonna be crazy. Everything's gonna be interconnected. Internet of things, internet of value, internet of trust. I mean, yeah, it's crazy, bro. Like it's really crazy. I don't think because when the internet started, nobody knew where it was going, right? Nobody even had an idea that it was gonna be what it is today. It transformed society beyond comprehension. Nobody, I don't care who it is, how smart he was, nobody had a clue how the internet was going to transform the world. And this is, we're going to see another transformation like that. That's what we're seeing right now. And it's going to be bigger than the internet, in my opinion. Way bigger, way more transformational on how we will live our lives and stuff like that. So that's what I see, bro. That's what I see based on that. So it's crazy.
It is, and there's a lot to it. The other thing I want to point up or bring up to you guys' attention is this update from André Casterman, right from XDC Network. This just simply came across my feed actually a couple of days ago. I meant to share it with you guys, but let's face it, we're producing a lot of content, so sometimes can't get it to you like that, literally that second. But we're going to share this with you. I think it's important. I've gone ahead and fast forward to this key area.
Blockchain as a new piece of technology since a number of years has been a way for some of those new entrants to rely on digital technologies for anchoring contracts. For instance, if you want to protect your lending activity with a promissory note or a bill of exchange or a bill of lading as collateral, you can use blockchain to digitize this contract, because a promissory note, a bill of exchange, is a contract. I commit to reimburse you, I commit to pay, and that can be used as a collateral when financing receivables. For new entrants starting from scratch, of course, they will use as many technologies as possible rather than paper. Also for the reasons of agility that we mentioned. And this is a great use case where blockchain makes a huge difference. And it's a very simple one because we're going to use blockchain for those instruments as a way to record transactions. We're not going to move money yet, because that's another level of regulatory compliance and complexity. We're just going to record the contracts and track the transactions to make sure they are authenticated, verifiable, and have not been tampered with. So that's the first track I would suggest.
Right. Blockchain is not just a transfer of value, but also exchanging information. As you said, if we tokenize this bill of lading and whatnot, it can be used for as a collateral, right? Okay, so yeah, can you tell us about the stable coins? Because definitely we need banking partners for on-ramping and off-ramping. So can you share any exciting partnership with XDC Network?
We have heard about central bank digital currencies and more than 40, maybe even more central banks working on this. So it has been promising, but has not progressed as fast as stablecoins. Stablecoins is a tokenized representation of the dollars or euros in bank accounts. There are different variants, of course, but the key is that the regulators now have been very active on this in Europe, in the US, and also in the UAE. So more and more independent parties such as Ripple, Circle, Tether are major players in non-bank stablecoins, I would say, but I would expect also a huge number of stablecoins to be issued by banks themselves. top banks. And some US banks have already indeed announced they're waiting for regulation to clarify how and when they could be going this way. In the UAE, we just have indeed the first Abu Dhabi bank announced a dirham-based stablecoin. So it's another proof point that the traditional finance world, together with the regulators, otherwise they wouldn't do it, are recognizing the power of blockchain and different use cases as relevant and strategic for their own value propositions towards their own clients. So the train has really left the station on this use case. The challenge for tech providers like us is to being able to interoperate all of those parties, because you have new entrants in blockchain, stablecoins, trade finance. You have the incumbents like the top banks, and all those parties need to operate. I predict that we're going to build new networks of correspondence. You know, SWIFT is managing the correspondent banking network since 50 years, and it has worked brilliantly and will continue to work brilliantly for moving money across bank accounts. The stablecoins will demonstrate that how big players, including Circle, Ripple, and others, with the top banks and local banks, will build a new form of correspondent network. I wouldn't call correspondent banking network, but correspondents that are working together to move money on the blockchain across wallets. Because we're not talking about bank accounts there, we're talking wallets. Now, you mentioned indeed off-ramping and on-ramping, and that's a key function because it's a way to bridge the correspondent banking world with bank accounts with the crypto wallet accounts on the blockchain.
Jesse, let's talk about this for just a brief moment. So, André Casterman mentioned quite a bit there. He mentioned specifically Ripple numerous times, said that the train literally has left the station. Rosie Rios has said that quite a few times. We also had examples of wallets. We know that Quant, with their other new product, right, other than Flow, of the Over wallet. I'm thinking not just blockchain agnostic with Quant's Overledger, but wallet agnostic moving forward. We've done the research in regard to Fireblocks. He talked about custodians and all that. It's just like this next era. So correspondent banking and regulatory compliance with that. How do we have this all flow? No pun intended. I think it's a big deal. Before we get into the Ripple side of things and be the final connector of it all, I definitely want to get some of your thoughts in regard to this interview with André Casterman, which, by the way, was only about 2 days ago. Jesse.
Yeah, so like you said, right, they're tokenizing everything. So I was taking some notes here, so I don't forget anything. They're tokenizing bill of lading, promissory notes, collateral notes, insurance, everything, right? They're collateralizing everything. So if you have a bill or a debt, you can literally take a loan against that debt or against that bill of lading right away, instantly, and then now you can probably settle that with another asset, and it's just mind-boggling. Like, they're tokenizing everything. That's why XDC network is more like an infrastructure layer for global trade. So all the trade documents, everything involved in global trade and shipping, importing, export. So that's the main infrastructure layer for that, is the XDC network. And I mean, it's just never ending. And then what else was going to say? So for Ripple, while he talks about the correspondent banking, he said, well, SWIFT is always going to work, and we see Ripple kind of building something on the side. Complete BS, to be honest with you. I mean, we know that SWIFT is using Ripple, okay? They're like, correspondent banking doesn't work. You can't do 6-7 multi-hops and have errors along the way. You don't even know where the money is. When you're using SWIFT, you're sending money. It's like sending a letter 50 years ago. You only found out if the person got the letter, a few months later. Like, it's with SWIFT, you find out about a week or two if they got it, if it reached a destination. Like, you can't, like, it's just so error prone. It's like dinosaur. It's pre-internet. Like, it doesn't work. So when he's saying like, SWIFT's always gonna, so corresponding banking will always work with SWIFT, that's complete BS. Like, they're going through RippleNet. They're going through XRP. Okay, so I just want to make that clear. That's I can't say it enough. It's BS, right? They know the language they got to talk when they talk about certain things. They cannot say on camera, oh yeah, SWIFT is, you know, it's going to connect to XRP, it's going to settle through XRP. They can't say that. Like, this guy, and when he said, you know, we've heard about, I think he said we've heard about CBDCs, you know, maybe they're coming later. I think that's what he said. Maybe I'm mistaken, but that's what I understood. I mean, seriously, you heard about CBDCs? Come on, come on. Like, oh my goodness, the language. Like, every time I listen to them talk in a seminar or anywhere, like, the language is just, they're so trained to not say certain things. It's unbelievable. And a lot of times you're talking about Quant or XRP without, especially XRP, like they're talking XRP without saying XRP. So yeah, I mean, in this, again, Quant is the glue that glues it all, connects it all. And it's just, I don't know, man, I could go on for hours.
It's fine. My thing is this: the reason why, as you would say, that they're trained is because literally non-disclosure agreement. You know, he's probably signed many of those. So, you know, that's where we're going with that. Listen, guys, the next thing we want to jump into before we wrap this up is from Ripple. And as we share this, again, it's worth pointing out, and again, comes from Smoke, doing it big as usual. What does he have? Well, here's the Ripple plug. Smoke points out that yes, banks will be able to simply connect their core systems to the Ripple network in the same way they connect to SWIFT. Back to what Jesse just mentioned. So, check mark. Undeniable evidence. Well, what evidence does he have? Let's zoom in. As we do, you see here in the highlight that Ripple does, in fact, rebuts the criticism of its use of blockchain by saying that the interledger protocol gets around the issues raised because it simply connects existing bank ledgers rather than holding the ledger itself. In effect, banks connect their core systems to that Ripple network, and like it also mentions in regards to like how it currently connects core systems to the SWIFT network. But whatever the case be, the ILP is used to coordinate the payments. Think about that. This addresses the fears banks have expressed about the blockchain around privacy, scalability, regulatory approval, and the issue of having to get all parties basically to agree to validate the transaction. At the bottom, you see, for example, like it says, HSBC, Global Head of Payments Innovation and a member of the Global Board of SWIFT from 2010-2016, admits that, quote, a single blockchain is not viable. The future is in different currency blocks with Ripple and interconnection. And then the bottom part, where it says, for example, with SWIFT and all that, well, that GPI suggests that Ripple believes the blockchain can be part of a new global payment system in some way. Kind of funny to read that. All right. You guys want to see the receipts, and I can't blame it. In the citation, this actually comes, believe it or not, from SWIFT, an actual official SWIFT document in this PDF, bottom left, like it says, SWIFT. And what do you see here? Bank disintermediation. You see your Western Unions, you see right in the middle of it, your Ripples. And of course, with the help of the Ripple blockchain, interbank payments can indeed be made. The exchange of personal data should be considered or, be as confidential as possible. And only SWIFT can make a good job of it, said Wim Raymakers, the head of banking markets division at SWIFT. If anything, draw your own conclusion about that. There you go. And don't ever forget it. Bottom left. Look at it for yourself. Keep in mind, if you go to the SWIFT website on desktop version, it's a little bit different from the app. Why is that? All right, so we're going to do now is kick it back over to us, and we'll leave you with this closing statement from Jesse, your thoughts, and then we're going to close it out. Thank you so much, you guys.
Yeah, this is actually what I've been preaching for a month since I started my channel. You're seeing in the shared ledger, the unified ledger, which Quant is providing the programmability and interoperability for, okay, to connect all the legacy systems to it. You're seeing that shared ledger being connected, that unified ledger, shared ledger, in the BIS documents. This is the central banks for central banks, the BIS. It shows the interledger protocol connecting the unified ledgers. Right. And we see, again, Gilbert Verdian said we partnered with R3 because they are the ones who are bringing in the shared ledger. And R3's got a big partnership with Ripple. Right. And so now we're seeing SWIFT documents specifically saying that Ripple and the interledger protocol is connecting it all. And that is in regards to exchanging money. Now, there was a comment on there. Let me see the notes here. Ripple is the interconnection for blockchain, right? They say there's going to be many blockchains, but Ripple can be that interconnection. It's going to be that interconnection. Why is he saying that? Because the XRP is the main, that's going to be the main liquidity source when you're trading one asset to another. So that can be tokenized assets and everything, but that's also crypto. Okay, that's Bitcoin, that's XDC, that's Hedera Hashgraph. When you want to trade a token for another, XRP is going to be that main liquidity layer for everything. Any asset to any assets, including crypto. Okay, and so that is that unified ledger where Gilbert Verdian said, we're partnered with R3. They're bringing in the shared ledger where all of the tokenized assets will reside. So what else was there on there? What was I going to say? Sorry, I lost my train of thought here. But yeah, that's what I said. Like Swift is using Ripple. That's the liquidity there. XRP is for that exchange of value, and Quant is for connecting everything, like all the legacy systems to blockchain, and also into that shared ledger, because the shared ledger is a blockchain. That's Ripple technically, right? So the XRP ledger, and you're gonna have XLM as well. And so Quant allows everything that exists to connect to all different blockchains and build multi-chain applications. So that's applications that use the best features of each chain. But this is exactly, literally, these documents, what you're pulling up now, is exactly why I started my channel, because I was so tired of people being deceived. You know, like, oh, is Ripple being used? Is Quant doing, like, no, it's yeah, it's so crazy, man. Like, Swift has all been planned for years, man. Like, Swift using Ripple has been planned for years.
Well, of course, they introduced ISO 222 messaging back in 2004, and basically speaking, 2004 is the year technically Ripple came out as well. So thank you guys so much for tuning in. If you listen to this entire outline, simply do us a solid and type in this key phrase into the comments, and that is money engine, and we'll know that you listen to the entire outline. On behalf of myself and Jesse over at Apex Crypto Consulting NFA, know what you have, know why you hold it. The research trumps FUD 110%. We will see you on the next one.